If your timing was right, you may have made millions of dollars buying GameStop stock in December 2020 or January 2021. But if you purchased GameStop 1 year ago to date, you would be down $171 per share, losing 64% of value. And even this year, based on its closing price of just under $93 per share, you'd be down $55, or about 37% of your investment since January 3rd. Is there no end to the carnage? Is there any possible way that GameStop will once again roar back to life as the meme players try to ride it back up to the moon? Today is Monday, March 14th, and GameStop is expected to report earnings after the close on March 17th, just 3 days hence. GameStop last reported losing about $2 per share on an annual basis as of last December. And is there any reason to believe that they've turned things around? We will find out on Thursday when, after the close, they will announce earnings. The consensus earnings are 84 cents for the quarter, which analysts forecast ranging between $1.25 and 28 cents respectively. The mean has trended upward from the last estimate of 78 cents. But these are estimates only, however, and it should be remembered that GameStop hasn't reported a profitable earnings since the last quarter of 2021 with a profit of $1.23 per share. Okay, the company has been losing money since, and a surprise earnings positive could slow down the tremendous falling in their share price. But is there any change in the narrative in the company that started the tremendous short squeeze to begin with? Are consumers rushing out to buy games and consoles at retail stores in any big way since online playing and downloading games started trending? Has there been any change to GameStop's business model that makes you wonder how it has imagined to survive this long after big box video rental and sales stores went the way of the dinosaur? Certainly, the street doesn't think so, reflecting GameStop's tumbling down to earth from the stratospheres above. Schwab Equity rates GameStop a solid F with a sell recommendation. On March 10th, CFRA analysts also recommended investors sell GameStop. Of course, GameStop's naysayers have been burnt before, and the possibility of a surprise positive earnings report could ignite another short squeeze, sending the stock how high? This scenario was presented in the street, citing 100% utilization of GameStop shares. If brokerages decided to call in their shares, there could be a new short squeeze. On the other hand, if there is no short squeeze and share earnings do not impress, is there anything to stop GameStop from further decline? In addition to the unknown factor of earnings, GameStop's short-term fortunes might be influenced by congressional hearings scheduled for this coming week on stock trading reform. Might the very act of putting GameStop's historic short squeeze and run-up create a surge of new interest in the stock? Might potential speculators look at GameStop, see that it has a high 15% short interest level, and figure that history could repeat itself? Might the Reddit crowd be sparked to buy the shares and take delivery, forcing short covering? All these factors, plus the stock market's overall wild gyrations in the face of rising interest rates and the ban on Russian oil and the unpredictable fortunes of war and peace. This year, consumer discretionary spending stocks have been very hard hit in the face of rising inflation and gas prices. It's understandable, of course, as you have less money to spend on non-essential items like games if you are paying more for things you must buy. GameStop, even if they post a good quarter in December, might be seen as being vulnerable in future quarters due to very high inflation in the U.S. and worldwide. So what's the final prognosis for GameStop? In our opinion, we believe that GameStop stock should be avoided based on fundamentals alone. The closing price of just over $92 per share from Friday, even down from its crowd hysteria highs of over $300 per share, is just not supported based upon its current and future prospects. It is simply too dangerous to buy before the earnings report. And while a better-than-expected earnings report could pump some life back into the shares, even creating a bit of a meme crowd squeeze-up scenario, that is simply too speculative for our tastes. As a disclaimer, we do not offer formal investment advice. We are only offering our opinion. We recommend you always seek professional advice before investing, and remember, all investing entails risk of loss. So what do you think? Where do you think GameStop is heading? Has the carnage ended, or will GameStop fall back into insignificance in share value from whence it began before the meme crowd attacked the short sellers? Does the stock have any intrinsic value based purely on its business? And if so, what do you believe the target price should be? Please leave your thoughts and comments below, and be sure to subscribe for future alerts right here at Stock Market Fever.